last segment. It's all about crystal ball gazing and imaginative peek into the vision for the future. The CEO panel. We've got a moderator, Mr. Manoj Agrawal, Group Editor, Banking Frontiers, to kindly come on up, sir. Our next leader is Mr. Rachit, Chawla, MD and CEO of Finway Capital FSC, Mr. Chawla. Our next leader is Mr. Sanjeev Kumar, co-founder and CEO of Spice Money. Our next leader is Mr. Manoj, Ravi, CEO of KLM AXIVA FINVEST. Our leader, Mr. Vivek, Tikoo, co-founder of ZingHR. Gentlemen, stage is all yours. Thank you so much.
Thank you so much. Welcome, panelists. We're going to have a half an hour discussion today on the future, on the vision, on the critical issues, on the perspectives that leaders think about in terms of planning or shaping a vision for the future. And we have some very eminent people on the dais with us. So let's jump into the discussion. And towards the end, I'd like to open up the floor for a Q&A with our fellow NBFCs here in the room. Let me start with Manoj. How do you see an NBFC or the NBFC sector as a whole creating some kind of vision for itself? Not just by saying we'll grow 20% every year, but what shape will that growth be? You want to share your perspective on that?
Sure, Mr. Manoj. So let me just introduce myself, Manoj Ravi, CEO KLM AXIVA. I'll just give you a perspective about our business model as well. So we are into gold loans. We are basically from Kerala, predominantly there in southern states, Tamil Nadu, Karnataka, Andhra, Telangana, and currently we have entered into Maharashtra as well. So this is a real conventional model which has evolved from down south. Mostly you might have seen many of big daddies in the gold loan. And about 50 years of business saga which they have actually given to many, and many NBFCs are following the same pathway. Regulators, to an extent, so we are very fortunate that many regulations from RBI into this last 10 years have given a lot of helping hands and life for gold loan NBFCs, I'm saying. So the point which I'm making is there were no much of regulations in the LTV aspects, loan to value aspects earlier. And about 7-8 years before, they have stipulated to 75%, wherein the regulation has given a lot of impetus towards the growth saga for all the NBFCs, including big gold loan NBFCs and smaller. So we are a medium level NBFC, 1400 crores of AUM we have, and about 20 years of business experience. Now there are a lot of fintech companies evolving, and so they are also having different models. Now RBI has regulated much on that, and they are also coming under this umbrella of RBI restrictions. Now what we see is, even though we are having a lot of technologically driven aspects there in the gold loan space, our conventional model is working very well there in gold loan business then for us. So that so we need to really emulate the aspects, and we do have our own methods and methodologies to cater to such kind of old methodologies. So mostly we are into rural space, and the people, the customer base which we have, it is the common people, those who have small amount of gold ornaments, they will come to us, and for immediate purpose, they take about 50,000, 25,000 rupees from us, small and micro loans. So they need to keep their gold ornaments safe there. So, the regulations which RBI has, come out with right now was very much good for us, and it will give a lot of impetus for the next 3 to 5 years more. That's what I'm saying.
Do you expect the regulators to continue the same supporting, proactive supporting role
for such kind of?
Okay, fantastic. Sanjeev, you can begin with giving your introduction. And then the question to you is that given again this regulatory scenario that the regulator is becoming more increasingly active, and then given the fact that your business is much more into the rural sector, okay, and rural sector is where there's maximum number of unserved and underserved customers. And given the fact that for many rural customers, it's not just financial service they need. Because if they have to travel 20 kilometers to visit a branch, that's a bigger pain than giving a photocopy of your Aadhaar card, for example, or filling in a form. So given the non-financial services aspect, which you can tell us whether you think that comes under regulation or not, whether that should come under regulation or not, because for NBFCs, it's a bundle of financial and non-financial services. So keeping this in mind and keeping the rural landscape, how do you envision the sector shaping up?
Thanks, Manoj. So for everyone in the room, let me just introduce Spice Money and maybe then come to answer your question, Manoj. We are a rural fintech platform. We are about 1 million entrepreneurs across 18,000 pin codes. And what we do, we serve about 2.5 crore consumers every month on our platform. We do about $2 billion throughput every month. What are we trying to solve? We're trying to solve the problem of access. So coming to what we were saying is, if you go to rural India and we're talking generally, I'm talking of blocks and villages, the problem statement is lack of access. A rural consumer has lack of access to a banking branch, he has lack of access to a lot of services including credit, and credit is another big thing. That is something that we are trying to solve today, one. Second, let me add, I think when you talk about regulations, the objective of the regulator is very different. I think the objective of the regulator is not to degrow business. I think it's about protecting consumer interest.
Okay.
And keeping that at the center is all where all regulations come emanate, and I don't think that has ever changed and should change. One. Having said that, when you talk about the future of this business in rural, I firmly believe that the opportunity, and all of us know the opportunity, I think the question is what is it that we can enable to it? And when you talk about credit, there are two problem statements. One is you need capital, because rural India is deprived of capital. Second is collections. And credit cannot work without collections. We try to solve that problem. We're building the collection network today, wherein a consumer can come to our outlet at every village and deposit the money. Now that kind of infrastructure, so come back to the point of, till the time you don't have infrastructure which can enable access from a consumer and a product manufacturer, you'll not be able to increase the business, and I think that is exactly what we're trying to do. So that is what I would say is the vision, is the future for for credit in rural India.
So by collecting, are you talking of physical and digital opportunities?
Yes.
And when you talk of vision from 18,000 pin codes, where do you want to go?
So as of now we cover 2 lakh villages.
Okay.
And we want to go deeper into those 2 lakh villages and come to about the 6 lakh villages. In the next 3 years we will cover
6 lakhs is the entire country.
That is the segment that we'll operate in. That's the 80 crore of Indian population which is deprived and has lack of access to every service, including financial services.
Okay. Rachit, if I may come to you, NBFC is a new concept in the country. For all these hundreds of years we had banks, and banks have established a brand for themselves. Banks have established an identity for themselves. Okay. How does the NBFC sector compete with bank in terms of brand and identity? Can you share some thoughts on that? And you could perhaps give two perspectives. One is a small NBFC and other a larger, because you have these larger NBFCs from the house of Tatas and Birlas and Adanis and whatever else. So how do you see a conglomerate NBFC and an independent NBFC, the brand building opportunities for them?
Sure, thanks Manoj, very relevant question. And I am Rachit Chawla. I am the founder and CEO of Finway Financial Services Company. We are a RBI registered NBFC, and we cater to the half of the population that is left after Sanjeev's territory, which is the main metropolitan city. So we are present in all the metropolitan and mainly, some of tier 2. To answer your question, Manoj, there is one clear distinction which the consumers are aware of and how we portray ourselves. A big bank is bound by too many regulations. Generally, they don't listen to the customers. They don't understand the problem that the customer is facing because there is a complete process-driven systems that they have to follow, due to which the turnaround time is too long. I mean, I'm sure everybody in this room have faced this problem. The bank will lend you money only when you don't need it. But when you are desperately looking to raise money, there is a lot of challenge, and that's where we come into picture. You'll be amazed to know that 70% of the loans that are passed in our NBFC are actually just bridge gap funding. People come to us for 6 months maybe. They then probably take over the loan by a bank. The reason they come to us is because we are able to give them money digitally when they need the most. They are willing to pay us an extra ROI also because they understand that banks will not come to their rescue at this point in time, but a NBFC will be. So that's the kind of edge that we work around. The good thing is, because a lot of churning happens, we are able to make ground level good relationship with the customers so that they come back to us again and again. And more churning, Manoj, makes the NBFC more profitable also, even when the ROI is on a higher side than compared to a bank. Because every time the customer takes money from us, there's a processing fees involved. When the customer exits the loan, again when they come back, there's again processing fees involved. So higher churning and lowest turnaround time is the USP, and I think a lot of people have now embraced NBFC. There is no negativity around it. Earlier, people used to feel, I'm very credible, why should I go to NBFC? I should rather go to a bank. It's not the case anymore, because everybody started to understand that you have to get money when you need the most, rather than taking money when the bank is willing to lend.
So in a sense, you're saying that NBFCs that are giving customer an excellent personalized service, that's where the relationship building starts, and that is perhaps more important than the brand identity which an SBI or an ICICI or whatever would be having.
Absolutely.
So it's a personal relationship and rapport.
Personal relationship and completely transparent. When I say transparent, we have a proprietary in-house technology wherein the customers can access to all the tools that customers get when they take a loan from any bank. So you have access to your statement of accounts, you have access to whatever you need real time through a mobile app. Now the consumer is also happy because everything is transparent, and they don't end up paying us extra. They pay us only that which they are legally bound. And with the regulatory body coming in again and again with all the regulations, I think RBI has done a great job. I mean, people who were not taking care of the regulations are shutting down. There was a big shutdown of mobile apps, the Chinese companies that were operating, and that's because the regulators are doing an amazing job, which is giving us the edge to cater to more and more customers.
Correct.
And in fact, right now in my NBFC, there's a lot of co-lending opportunities also we have tied up with. That also gives an edge, because bank also understand that they cannot compete when it comes to the turnaround time with the likes of a small NBFC.
Absolutely.
So that's also a USP that we enjoy.
Fantastic. Good. So that gives a clarity to an NBFC that it doesn't necessarily have to be a big brand, but it has to have that engagement and transparency and turnaround time to build, to grow the business. Vivek, coming to you, my first question is, you've heard the NBFCs, and we know what, and you have kind of probably got an idea of the culture that these NBFCs have. And of course, I'm sure you know how banks operate and what kind of culture is there. Do you want to touch upon the cultural aspects of NBFC sector, the people cultural aspects, So given this perspective, and obviously that's not the case in an NBFC, right? It probably is a very competitive environment. How do you see HR strategies, policies, solutions playing out for the NBFC sector in the landscape of banking and insurance?
Good morning, everybody. My name is Vivek, Tikoo, co-founder of ZingHR. I think we today are perhaps one of the largest cloud HR SaaS operators in India, and of course we are also in the select global locations in the world. We have, I think, over 200 customers, very, very large and very small as well, SMBs and medium enterprises and large enterprises in the SMB sector. Now the point is across the board, I mean, so we'll have customers who are 200,000 employees and we would have customers who are probably 50 employees and 100. Apart from the NBFC sector, of course, we are in manufacturing, we are in every single sector that we service. But talking about NBFC sector here specifically, I think the point is that the simple value proposition that NBFCs would seek from a people perspective is their rapid ability to be compliant, to be able to scale their businesses in a manner where their fundamental business objectives of CSAT, their fundamental business objectives, also internally backwards of employee satisfaction, alignment with business goals are actually met. So from our perspective, I think we today have an opportunity inside our platform to be able to align these business goals of NBFCs and the changing landscape. See, there is this constant government directives of higher levels of quality and compliances that is coming in. And what that basically means is that you have to be not just agile, but you also have the ability to implement and execute this real time, not just on the business side, but on the people side, internally for the organization. And to make that execution happen, it is really about cultural perseverance of your core values that the NBFC itself stands for. So whatever is the NBFC's value proposition with the key components of speed, agility, the quick turnaround time that the NBFC gives versus the traditional banks for last mile inclusion and stuff like that, whenever the customer needs it in the real time, the fact is it has to be successfully met by people and people teams inside the NBFC, and that's where the critical link today comes. If the NBFCs in the country have to really scale up their business, and NBFCs, as we saw, are doing a great job, NBFC organization structures will have to be able to build those competencies and performance cultures to align that beautifully and achieve those business objectives.
Interesting, yes, that makes sense. If I may come to our NBFC friends, going ahead with what Vivek just described, let me phrase my question in two parts. One is, I'm surely you are onboarding new employees, right? As business grows, as you replace people who are moving out, what kind of HR challenges are you finding with new employees? Does it take you 1 month, 3 months, 6 months for them to be stable within the organization? And overall, since we talked around faster response, we talked about faster response. Like earlier, maybe monthly monitoring may have been okay. Is that now weekly or daily or something? You need more closer monitoring to be able to manage business, to manage compliance, to manage risk, those kind of things. So one is new employees and other is the speed of or the frequency of monitoring. Would you like to comment on these two aspects? Yes, Sanjeev.
So let me start. So fundamentally, I think see the new generation is very different than when we were growing up in our careers.
Okay.
And today, I think the entire HR practices and the way you want to build a culture is very different than what we saw. So the expectations of the people coming on board is also different today. We are living in a global world, we are living in a digital world. We are living in people where they want, at their own terms and conditions, they want to work. It is not the 9 to 5 which is necessary, but you know what, give me my space, give me my, I'll give you the work. So question is, I think the way you, second, apart from professional, it's also emotional well-being, which is also becoming a very, very important factor. Right? How do you as an organization, how do you see to be emotionally connected with your employees? So today the expectation of the youngsters, at least the young generation which is walking in, is very different than at least when we walked in. We were looking at stability as one of the big reasons to walk into organizations.
Correct.
I don't think that is what people are looking at. People are looking at the kind of culture. What am I going to learn there? Am I going to enjoy working there? Right? Who all are going to work with me? Right? What is the social connect that this organization brings? So there are a lot of other facets to work which is defining the culture today, which is not what it is. And that's something which is changing, which hence I think the HR process need to be very, very futuristic, more agility than what it was earlier.
Oh, do you have to maintain two kinds of process? There might be some employees, there might be a good number of employees who are in their 40s, 50s. Their mindsets may not have changed. I'm guessing so.
So let me answer
and there are those 20-year-old.
Absolutely, Manoj. So answer to that question is, sorry to say, but all the 40 and 50 years have to change.
They have to change.
Yes. It's not an option. You cannot say.
Okay.
So I think the answer to that is, you cannot change the young generation. You got to change to that world that is coming in, because that is the future. Right? We cannot say that, you know what, you got to change yourself to suit my practices. I don't think that organization. So we need to change. The answer to that is, we need to change for the future and not them.
And do you other gentlemen kind of agree? Or have a different opinion?
Yeah, so I totally agree to Sanjeev. So my father is an entrepreneur, and he jokes with me saying, you really take good care of your employees. I remember running an organization when they were still working fine without even taking care of them, but nowadays employees has actually become a family, because we understand that we are spending most of our time in the offices. Like if I spend 9 hours a day, that actually becomes a family. It wasn't the case, when my father was an entrepreneur. It was more of a, they needed the job, they wanted to earn their bread and butter. Whereas right now, it's not about bread and butter. Everybody, I think, has grown to that level wherein it's become more aspirational. They want everything to be super transparent, no bureaucracy, no partialness. They want everything to be documented. They want the culture to be absolutely apt, and work-life balance is must. And we do a lot of exercises, town hall meetings, evaluation grades. And to answer your second question, which you rightly pointed, earlier the reviews used to be quarterly. Now actually it's become weekly. Quarterly
to weekly?
Yeah, so it's become so dynamic, the entire business, that we cannot wait for the quarter to end. We have to take actions every month, and we have to review it every week. It's become like that.
In that sense, your employees are more demanding than your investors. Investors will wait for a quarter for you to get some report.
If you invest in your employees, in your team, I don't think so you need external investors. So that's where I'm coming from.
Manoj, what was your take on these points?
Yeah, I completely agree with both of these gentlemen. Where so this should be a mix of that. So the youngsters, those who are coming into our own fold, should learn very fast. As far as our industry is concerned, it is kind of a technical know-how which people need to impart, and they need to learn to understand how to check the purity of code, how to do all kinds of activities in the operation side, all those things which is actually a set parameter where we are teaching, where so new people, they need to learn it very fast. There are a lot of veterans, those who have spent a lot more time there in the industry for last 50 years or 40 years, are there in our own fold. So they are the real experienced people, those who can impart this knowledge. So we can't just forget or beat away these kind of people, those who are not that much of tech savvy. But into this particular business, we need that kind of an expertise as well. So
Traditional expertise.
Traditional expertise. So both these, millennial as well as
You have to match,
experienced
keep
people.
both of them happy.
Yeah, we go with both of these, kind of generations to come out with a very good business model. And it is actually, very successful in our business model. We know that, so this industry is very huge and business potential is also very huge. It's $1 trillion worth gold economy is there in India.
$1 trillion.
So 80% of this is still there in the household. 20% is only monetized. So the opportunity of gold loan business is very huge, and it is only there mostly there in South and mid India, where we need to go very fast to the other geographies as well. For that matter, these people are very much necessary. Though they are not that much of tech savvy, we will catch hold of them and take people along with us for teaching the next generation as well.
Okay. Thank you.
That way.
Let me ask Vivek a follow-up question for a very quick answer. What I'm understanding from them is that earlier an HR software would be deployed to serve the needs of the management. But what I'm getting in essence from them saying it also needs to serve the employees. It's now more like an interface between the management and the employees. In that sense, how is HR software, is the software changing, or is it the way you deploy software changes? Can we have a very quick answer?
Probably in less than 2 sentences. I think an HR system today is no longer just a singular system. Multitude of systems, multiple indexes, the human wellness index, the emotional index, the indexes which essentially capture all the data and then convert them into business outcomes called performance and cultural outcomes. Today's HR systems are able to do that, and I think we also do that.
So that's a big change.
That's a very, very big change. Absolutely. Thank you.
Thank you, gentlemen,
Thank
very
you so
much
much.
for
Thank
your
you so
insight.
much.